Hey everybody, happy Friday and welcome to Wade's Weekly Update. I, of course, am Wade Byers, the helpful mortgage man here with First Community Mortgage in Mt Juliet, Middle Tennessee area. Today is Friday, July 25th. I hope everyone has had a great week and looking forward to a great weekend. So a couple of weeks ago, we talked about what items kind of impact your credit score. And I wanted to kind of expound on that a little bit this week. You know, the two items we talked about that have the biggest impact on your credit score are paying on time and keeping those revolving accounts, keeping those balances low. So let's start with keeping the balances low. The credit score software that kind of develops your credit score takes your whole picture of credit and puts it into a score for you. It likes to see your revolving accounts being credit cards, lines of credit, things like that, at 20% of the balance or below, or 20% of the available credit or below. So you don't want to maintain a higher balance than about 20% on those revolving credits. So for example, say you've got two credit cards, they each have a $5,000 limit, and then you've got a line of credit for $10,000. So you've got a total line of credit, total revolving available credit there of $20,000. That means you do not want your balances, your combined balances of all those, to be any more than $4,000. So of course the idea of credit is to utilize it and pay it down, and utilize it and pay it off. So the software does not like for you to see you carrying a very big balance. So as those balances get closer to the limit, your credit score gets impacted more. The more that they are down below what the limit is, the better off your credit score is. So after all, your credit score is an indicator of your ability to use credit and pay it on time. So the second thing we talked about, which is paying on time. So judgments and collections are actually a piece of the paying on time part of your credit. Judgments, of course, are any time that a court has ordered that you owe something to someone else. That will show up on your credit report, and it will have significant impact on your score. Collections are a little different. Medical collections are viewed a little different. However, once a collection hits your credit report, the damage is done. So anytime you have a collection on there, basically what has happened as the creditor has turned that account over to a credit or a collection agency to collect that debt for them. So that's going to impact your score as well. The one thing I can tell you, I see credit reports all the time. I see what happens to them when you pay down balances or when you miss payments, things like that. I've actually seen credit scores affected drop by 60 points, specifically by just not making your payment 2 months in a row, missing 2 months of payments, and drop the score dramatically. So that's really all I've got. I talked about it a couple weeks ago, and I'm always talking about to keep your credit score up, keep those balances low, and pay everything on time no matter what. And so I can't reiterate that enough. As far as the market goes, inventory is still pretty low in the real estate market, but from what I understand, there are some buyers kind of backing out right now because school is about to get started. So some buyers are pulling out of the market. So it's loosened things up a little bit, but inventory is still pretty low. And of course, interest rates are still ridiculously good. So as always, if there is anything I can do to help you, please give me a shout, 615-335-3356. Give me a shout, shoot me a text, whatever. I'm glad to help in any way I can. And again, I am Wade Byers, the helpful mortgage man. Hope you guys have a great weekend, and we will talk again next week. Bye-bye.